Hello everyone and welcome to this webinar on market entry strategy. It's being taken by Tarun Mehra, seasoned executive. He has had immense experience in this field in global strategic research and consulting. He is currently employed by a Boston-based consulting firm called Fuld & Company, and he's previously worked at places like Accenture, Monitor Group, Rail Research, and I2 Technologies. He's an alumni of the prestigious IIM and the IIT institutes, and regarding the topic, he will take it further from here. So I hand it over to Tarun. In case anyone has question, they can ask it by typing it in the question box, or they can simply mail it to Yashu, that's YASHU, @eneev, that's ENEEV.com. Thank you. Tarun, you can take it over from here. Thank you.
All right. Thanks, Yashu, and welcome everyone. It's a great opportunity for me to take this webinar and share my experiences from the last several years in the field of consulting and strategic market research. I'm happy to share those thoughts, and I think the intent overall for this webinar is not essentially to talk very specifically about financial modeling tools, which might be the case in other webinars that you might have attended. What we're trying to do here is, financial modeling in general has so many different applications in industries and business issues that it's, what I thought I would do is I would take one particular example of industry and business issue and talk more about it and share how does financial modeling actually fits into that. So what we're doing here is, if you move on the second page, here is an example where, and this is very typical consulting kind of business problem that we deal with many of our clients. A lot of our clients are actually dealing with growth issues. So when we say growth issues, they're clients who are thinking about, hey, how do we get into newer markets, new geographies, how do we launch new kinds of products, how do we get our existing products into new kinds of customer segments, and so on and so forth. So this was one particular case that I worked on last year. Actually started in 2011, end of 2011, worked on that for a couple of months. And the client context here was, this was a European medical devices company headquartered in Switzerland, and they had products in a wide variety of products. For example, heart valves, both mechanical and tissue heart valves, defibrillators, and a bunch of other very specific, very high-tech kind of biological products. And they had been super successful in the US and in Europe. And the business issue that they were dealing with was, hey, how do we grow this further? How do we get into, let's say, Latin America, which essentially everyone was talking about in the industry, that Latin America is growing, Brazil is big, Mexico is coming up, and so on and so forth. So that's a typical kind of problem that we hear from a lot of our clients. And the other interesting thing for them was they actually had part of their team, they had like some people actually based in Latin America, but they wanted an external consulting company to come in and evaluate what they already knew and bring additional information and insights, and finally recommend, give their recommendations about what are the right choices to make in terms of growing the business. So that was a business problem, the overall problem statement for us, that to identify growth opportunities for this client in Latin America. And just bear with me, I think finally we're going to get into how and where did financial modeling fit in. But what we're trying to do here is trying to break down this problem, next page, and saying that, hey, so first of all, let's take a step back and say, what kind of a problem is it? Is it a tame problem? Is it a complex problem? Is it a wicked problem? For those of you who don't know this concept, there are a wide variety of problems out there. You could be, if you're a mathematician, you might be dealing with binomial problem or solving linear equations or even calculus. And those, believe it or not, calculus is also, calculus problem is also a pain problem because there are specific solutions to a specific problem. There might be multiple solutions to some the second degree or third degree calculus equations, but essentially what you're saying is that if it's a mathematical problem, there is always a solution. There's clarity on how to solve that. There are methods to solve that. If you were to ask, if you were given a series of data and you were asked like, hey, find out the average or mean, or all of those problems are like very simple problems. There is very clear problem definition. There are very clear approaches. Then there are complex problems which are non-linear, difficult to understand. And you could think of that as example, if people have engineering background, you will understand those. Fluid dynamics is a problem like that. Traveling salesman problem is a problem like that. Actually, higher degree polynomial differential equations, those are problems like that. So it's not, there's no one solution to one problem. There might be multiple solutions. There might be normal kind of solutions. The complex problems are slightly higher in terms of difficulty to deal with. And then there are wicked problems. And wicked problems, as you start getting out much further on both the dimensions, both in terms of the clarity of the problem as well as on the clarity of the potential answer. And think of it as, think of poverty, think of crime, think of education. These are kind of problems where they're so interconnected, there are so many variables that it's so difficult to even start thinking about where to start solving the problem. So that's the category of problem that are called wicked problems. If you want to know more about these definitions, I'm happy to share the references and sources, but if I go back to my slide, the first thing that we do whenever we're dealing with a consulting problem is to figure out what kind of problem are you dealing with. Here, you're talking about growth opportunities in Latin America for this particular medical devices company. There could be many different potential solutions here. It's not, I would not frame it as a wicked problem. This is a solvable complex problem. It is not a tame problem. It's not a one problem, one solution kind of a problem. It's like there could be many options. There could be many choices to be made. So with that background, we usually, in the consulting world, we take a step back and we think about, okay, so what approach do we want? We need to think about an analytical approach to start working on the problem. But just before that, I'm going to get to page number 4, but before that, I think we just want to take a minute to talk about these two quotes here on the top left-hand side. Some problems are so complex that you have to be highly intelligent and well-informed just to be undecided about them. It's not decided, it's undecided about them. Lawrence J. Peters, some of you who don't know him, he was a Canadian educator born in Vancouver in 1919. He's popular for formulating a principle called Peter Principle, which essentially says employees tend to rise to their level of incompetence in any hierarchical organizational structure wherever the promotion of the employees is based on achievement, success, and merit will eventually keep promoting people to the level and will finally bring people to the level where they start becoming incompetent and don't move on to the next level. So and the point to mention more about Lawrence Peters is just to say that he's a well-renowned, very, very well-respected educationist, and this quote here is very important to understand whenever we start working on any kind of problem. You have to be able to figure out what kind of problem are you working on. Is it tame, is it wicked, is it complex, and so on and so forth. Russell Eckhoff is another American thought leader in the field of organizational theorists. He was a strategic consultant. He was professor at Wharton. Used to teach operational research, management, science systems thinking, and so on and so forth. And he says successful problem solving requires finding the right solution to the right problem. We fail more often because we solve the wrong problem than because we get the wrong solution to the right problem. So it's coming back to the original problem statement. So how do you identify growth opportunities for this company? How do you break it down to manageable pieces of manageable and solvable pieces, so that you're sure you're not working on wrong problems to get the right answer. You're working on the right kind of problems. So with that context, here's one of the framework that we often use whenever we are dealing with growth kind of issues or helping clients make strategic choices. I think it's more commonly known as where to play and how to win kind of framework, and there are many consulting firms that use this model and a variety of different flavors of this model. What you're essentially saying here is if we want to find growth opportunities, first of all, let's take a step back. Let's look at what is our growth vision. Do we want to, as a company, do we want to get into more products? Do we want to just focus on the current products? Do we want to just play in one geography? And so on and so forth. So let's take a step back and let's look at our growth vision. Because what you don't want to do is, you don't want to make the choices, the growth choices, that might actually give you some revenue growth in new markets, but actually starts cannibalizing or start making your current set of customers unhappy. Because in the end, you want to maximize the aggregate and not just one particular portion of the business. So take a step back, take a look at your growth vision, and then try to answer the question, where should we play? The word play here is, the metaphor is about what intersections of products, markets, customers, geographies should we focus on? And of course, you can't be playing in all the markets, all the geographies, all the products, all the segments, because then you could do that, but that's more often than not, I think companies and businesses understand the value of focusing on certain specific intersections and becoming really, really good at those rather than trying to be anywhere and everywhere. So leading from the growth vision, you talk about, for example, let's analyze which countries are most attractive and what customer segments and what are our current hypotheses about those countries. So for this particular client, we said, if you're thinking about Latin America, there are like X number of countries in Latin America. Probably there are 8 to 10 countries which are worth considering for a high-level analysis. And then we shortlist them further and finally dig deeper into a much smaller set of shortlisted countries. And then once you make those choices around, okay, so out of these 8 or 10 countries, here are the 2 that we should be focusing on, then again spending the time to figure out how are we going to succeed in those markets. And when we say how are we going to succeed from the outside, it might look like, hey, Brazil is a great market. The market size is huge. The growth can be, we can actually get tremendous growth there, but it's how do we get there? What has to be true for us to actually capitalize on that growth market, and how do we tap into the customers and so on and so forth. So those are the kind of questions that you try to answer, and how will we succeed. So mode of entry, target player, do you need to have a distributor, local distributor? Do you actually go down there and set up your own shop there? Do you hire your own people? Do you do a joint venture, and so on and so forth. So that's the how part. And finally, talking about what capabilities will we need. You might be able to say that, hey, it seems like we need to go, we don't have to set up our own shop in Brazil. We can actually work with this distributor, but in Colombia, we will actually have to go down there and set up shop. And then what kind of capabilities, what kind of people do you need to actually make that happen? So if you look at, if it says a very high-level framework, and flavor is always different depending on the problem and the client situation and the context that you're working on. But essentially, you're making much high-level strategic choices on the left-hand side, starting from the company's vision, and then making it more and more granular as you go on to the right and making more tactical choices. So let's say this is a framework that can help us work on this complex problem. And I think we established that this is not a tame problem. This is also not a wicked problem. We're not dealing with poverty or crime or education or hunger or social issues. We're dealing with something which is manageable, but which can have like multiple strategic choices. How we get deeper into that. then we're going to look at each of these blocks. So the bottom right-hand side, we're saying where should we play and how do we answer that particular question, where do we play? And this is how we did this for this particular time. We said that, hey, okay, there are 20 plus countries in Latin America. And we obviously should not be spending same amount of time evaluating each of those 20 countries. There has to be a meaningful way to shortlist. They have like billions and billions of dollars to pay us. We could have done very granular level analysis of each and every country's segment, product, and so on and so forth. But more often than not, whether you like it or not, clients always have limited budgets, and you have to make trade-offs and choices around like how do you scope out the problem so that they get the best for their buck and they get the value and they're able to make the decisions for which they're engaging you as a consulting company. So this is what we suggested. We said, hey, there are 20 plus countries. Let's look at very high level macroeconomic indicators and do some analysis, indicators like GDP growth, business confidence index, pest analysis, and so on and so forth, and essentially shortlist 8 to 10 countries without even looking at the medical devices market in those countries. This is still a very high level. You're looking at the general demographic, macroeconomic environment of the country, and you're able to pretty quickly eliminate at least half of those countries for further analysis. And then you get to the second level where you get deeper into the industry attractiveness analysis, and that's where you're going to get, okay, let's look at how big is the medical devices industry in these shortlisted countries, and then taking that to the next level, how big do we have the data to do a comparative analysis on not just at the high-level medical devices industry, but one level deeper, the specific product categories that this client actually plays in. As you're talking about heart valves, defibrillators, and so on and so forth, the specific product categories that these guys are in. You also look at regulatory landscape, how easy or difficult is it to get into established business in that country? Are there laws that prohibit actually you getting into the market without having local partners and so on and so forth? And on the customer side of things, is that and for these guys, the customers were hospitals, the customers were medical organizations, GMOs, and actually the end consumers and patients as well. What's the outlook for the customers? How they're paying right now? What kind of insurance system exists for those people, and so on and so forth. Do all that analysis that actually gives you a pretty clear picture about, hey, half of these countries probably are not worth considering further, but then there are these 3 or 4 markets and countries that definitely we should go deeper into. And this is where, when we did this analysis, finally the countries that came out were Brazil, Mexico, Colombia, and there was Argentina. It was pretty clear that from the macroeconomic perspective, industry attractiveness perspective, these 4 countries are actually pretty interesting. Large enough markets, regulatory landscape was not as prohibitive, and so on and so forth. So what do you do then? So and for Brazil, Mexico, Colombia, Argentina, you're going to go much deeper and see what kind of competition exists. Who are you going to compete with? Are there other international players already in the market? Who's going to be your biggest set of competitors? Is it going to be international, domestic? Are you going to get into pricing issues? From the competition point of view, is it a fragmented market or consolidated market? And you're going to do a little bit of value chain analysis. You're going to see what kind of distribution models exist. Do companies sell directly to the hospitals? Are there distributors involved? How powerful those distributors are? Essentially, look at all the different elements and also look at market trends. And then finally, based on that analysis, you're going to say, okay, so how is Brazil is attractive, and Mexico is attractive, but in very, very different ways. Brazil, moving on to the next page, this is examples. Brazil is attractive because it is large market, it is growing very fast, there are regulations that are expected to come out, which are going to make it more difficult for the local players because of the quality issues, and going to be opening up a whole lot of opportunity for the international players. Mexico is interesting because of other reasons. And then what are the alternatives? How do we get into Brazil? It was pretty clear, for example, Brazil, it's going to take this company a lot longer to go in there, establish themselves, versus considering the inorganic growth opportunities which exist. So there are a number of local players in the country which they could evaluate to acquire, and that helped them in multiple ways. They could make the time to get product licenses in the country pretty short compared to actually applying for the licenses themselves. And Brazil, Mexico, very different opportunities. It was pretty clear pretty soon that in Brazil the client should be evaluating acquisition targets. In Mexico, they should be there were no attractive acquisition targets, so they should be evaluating how to build their team organically, build their business organically through partnership with distributors. But so you can see very different opportunities. Again, was a complex problem. We were using the framework where to play, how to win. We were able to dig deeper, and we were able to say that, hey, let's try to find out the right acquisition target in Brazil, and let's try to figure out who the right local distributor in Mexico is to partner with. So very, very different approaches. Still answers the question, how do the company grows? How should the company grow in Latin America in different countries? Now, what do we do now? So it was clear we need to find an acquisition target in Brazil, which we did. We did some more analysis. We finally got down to one particular acquisition target. We started the discussions with them. We interviewed them. And finally, we had to figure out what money are we willing to pay them in terms of acquiring their business. In Mexico, the choices that you had to make was, so what kind of team, how many more people should the company hire to build the business, and what should be the sales targets that should be set for people, and so on and so forth. So if you look down, now we get, after doing all of this analysis, now we are feeling comfortable that we can actually start looking at the numbers. And now we can get into financial modeling and analysis and take all the data that we have collected throughout the process and make some assumptions, set some goals, and see what these growth opportunities will look like. And so on the Brazil side, you're going to talk about, okay, if we acquire this company, how much should we pay for the acquisition? And then how many years will it take for us to actually break even or make the money? What kind of revenue growth can we expect by working together? What is the initial investment going to be? What's the ongoing investment going to be? What kind of scenario should we plan for? Are we pretty sure that this is going to work? Is there a pessimistic and optimistic scenario? What kind of cash flow are we going to need? On the Mexico side, you're going to see what new team size, structure, sales forecast, return on investment, against scenarios and robustness. Moving on to the next page, these were the next steps. So we shared all these findings with the board. We shared the strategy choices. We shared about the selected growth alternatives, and we shared a little bit of financial analysis that we did, cost-benefit plan recommendations. We facilitated the whole decision-making process. We initiated discussions with external stakeholders, the potential target in Brazil, selected distributor from Mexico, finalized the deals, and revisit earlier financial plan. So they actually, our client actually went out and acquired this other company in Brazil, and then they still keep track of the financial model that we built and actually use that to keep track of like where are we compared to the plan that we had. Is a scenario 1 that is turning out to be true, is a scenario 2 that is turning out to be true, and so on and so forth. But let me just show you, before we go on to the next page, let me just show you what that financial analysis actually looked like. Here is financial analysis was actually the last step in the process when we actually made choices about Brazil. So here in Brazil, these are the column B are the kind of products that this client had, and essentially we said, okay, so in Brazil, here's the market size based on our analysis. This is the market size, and here's the market growth that we expect the next several years. and here's the average selling price of this kind of product, and here's the kind of market share that we think you can get and you should plan to acquire if you want to be successful in the market. So we did that for all the products, different product categories. You're seeing here heart valves, cardiopulmonary devices, tissue valves, and it's like pretty granular analysis. This was not the starting point. This was the end point. And then here you're saying scenario 1 and scenario 2. So we literally laid out, here's the amount of money that you should be paying, looking at the deal multiples in the market. And if you're going to make that kind of investment, this is the number of years that it's going to take you to recover that money. Here's this kind of profit. This is the profit margin that you can expect, and so on and so forth. And then did a similar analysis for Mexico, but then the assumptions and the approach was completely different. You were not talking about an acquisition cost. You were talking about the operational cost in terms of building the team and so on and so forth. And so I presented, in the slides, I presented only Brazil and Mexico, but essentially there was Colombia as well, which was a completely different case. So I just want to make sure that I show you, the intent is not to run you through the granularity here, but want to show you that this, how this all had to actually get down to financial modeling and helping them make some tactical choices and put some plans in place so that they could actually track that later on. The other thing, this is a set of slides that we finally shared with, and there were like hundreds of other slides as we moved on during the project, but essentially we said, here are the country summary, Brazil, Mexico, Colombia, these are attractive, these are the kind of things that you will need to do, and this is the target that you have to acquire. Here, all summarizes everything that I was saying so far, and then for specific countries, decision summary, how is it going to turn out in scenario 1, what kind of customer segment should you be targeting in Brazil, what kind of issues or registration, licensing issues that you should be careful about, and so on. So everything, all of that context and information and analysis is important before you actually can get down to put things in financial model. That's what I wanted to highlight through this webinar, that the focus, how do you get all the information? How can you be sure that the financial modeling that you're doing is the right kind of model? Because there is so much that has to happen before that, before you actually start crunching the numbers and applying the models and so on and so forth. So let me just pause there, and that was the last page that I had. I know, Param, you have another page to talk about, but that's what I wanted to talk about essentially. I'm open to questions.
Yeah, so thanks, Tarun. There are a few questions that people have asked. So Girish asks, so what is the weight that is normally given to financial analysis?
That's exact. There is no objective answer to that. There is no universal answer to that. If you mean, in my mind, it's a sequential process, right? It's a financial model. Each of these components here, if I actually go back, if I look at this page, each of these steps have to be done right. There's no, if you're saying a 25% weightage to box 1 and 25% to box 2, that's not how it works. It has to, all of those are equally important, because the next step is not going to be correct if you do not do the first one right. So, but let me think about answering that question in another way. I think we spend a total of 2.5 months on this project, and 90% of that time was about setting up actually looking at the framework, collecting the information, making strategic choices, having discussions with clients and potential targets and everything, and 10% of the time was actually focused on working on that Excel sheet and presenting the results and so on and so forth. I don't know if that answers your question.
His main concern is that since in most of these financial models, we make a lot of assumptions. So his question revolves around whether sort of post making these assumptions, it sort of does the model make sense at all?
It does, and that's why if I take you back to this sheet, there are, so let's say if I look at Brazil, when we say the market growth estimate is 7%, now how do you get that? You can look at historical data, you can, but that historical data is is a proxy. In the future growth rate can be very different from historical growth rate. So you look at historical data, you talk to people on the ground, you interview experts in the market, and then you make a judgment and then say, hey, you know, the historical growth rate was actually 5%, but there are these regulatory changes that are expected. We talked to the cardiac surgeons, and they were expecting that they were saying the market is opening up and blah, 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 and then all of that actually comes together to and you make a judgment that, okay, so for Brazil, the future growth rate is going to be 7%. And similarly, all these numbers here, nobody gives you these numbers on a platter. You have to go out, you have to look at different kinds of sources. There are industries in which there is a lot of data available. There are industries in which there is no data available. There are geographies. It's easy to find data for companies and industries in the U.S. versus emerging markets. So you have to make those choices there in terms of research methodologies and getting the right information. The other thing is you also make, when you talk about a pessimistic scenario and an optimistic scenario, there again you're making a bunch of assumptions. You're saying that, hey, if the market continues to grow as we heard in our discussions, let's call that an optimistic scenario, and then what if something else happened? What if the market does not open? What if the government decide on a new kind of model that does not allow external or international players to get in? And you try to, that's what we have to do as financial modelers. We have to, as financial modelers, I think our job is not to just give some numbers to our clients. I think as financial model, the goal is to be as transparent as possible to the clients and say that, hey, here's what we have found. Based on this, there could be 3 different kinds of scenarios. Our sense of scenario 2 is going to be the most probable scenario. And also talk about the robustness of your scenario, right? If there are a few variables that the model depends a lot on, then you have to be able to say that, hey, if this changes by 1%, our outcome is going to change by X%, and then you have to be able to say that.
We'll have this question. So typically, how difficult is it to collect this data, and is it really possible to collect this data? So for example, let's say if you want to enter into Latin America, did people actually go to all these countries to collect this data, or was it mostly based on secondary research?
I was actually down there to Brazil and Mexico myself, and a few other team members were down in other countries. So it depends what countries are you talking about. As I said, if this was a U.S. study, the developed markets, you'll find a lot of information from secondary sources, from databases, from analyst reports. If you're talking about emerging markets, or typically you have to do a combination of both. Now, you don't have to go down to these countries every single time. You could engage external agencies and talk to them, but it's not all of this data is available easily. As I said, I think 60% of our work was probably actual information collection, because the model will not make sense it's a garbage in, garbage out, right? If you're going to put in bad information in your model, I think it's not going to give you reliable results anyway. But I think it depends what role is. If you're playing the role of a consultant, then I think your responsibility is not just financial modeling. Your responsibility is also to make sure that the data that you bring into the model is as reliable as it can be. If you're playing the role of a financial modeler only, then I think you should make it clear to the client that, hey, my job is not to make sure I get the right information. My job is partly I can take the information from you and actually use that to create a model that will be reliable and robust. That's how it is right now.
On the same lines, as in once you've created the model, how do you go about justifying the validity of, let's say, the final numbers? So For example, let's say you say that the project is going to generate an IRR of 20%. How do you go and validate these numbers in the market?
There are multiple ways. I think you often do some analogous market. You look at comparative numbers. There are always the chances are that you're not the first company to actually go out and acquire another company in Brazil. The chances are that you're not the first company to actually go into Mexico and working with distributors. So there are always some anecdotal data that you have from past experiences of either yourself or industry or your clients too. But then when I say analogous markets, it can be same industry but different geography. It can also be similar industry but in the same geography, kind of a thing. But you're right. I mean, it's very hard to be 100% sure. It's very hard to be 100% sure on anything. I mean, as long as you're framing the outcomes in the right way, when you say here's a scenario 1 and scenario 2, for example, when we talked about, let's say, this page, you're saying you could put a number saying, hey, the likelihood of scenario 1 is X%, or likelihood of scenario 2 is Y%. But again, I think the top management and the senior executives are smart enough to understand that there is no certainty in life anyway. Right? But what you're saying is you're sensitizing them by saying that, hey, in scenario 1, I think scenario 1 is an average growth scenario. So right now your revenues are 3.2 million. In 2016, we expect if things continue to work fine, both at the industry level, market level, and you continue to do your job well, then you can be a 19 million company by 2016. But if there are but if some of those things don't work out well, and but still you can be a 12 million company. So that's how you have to be able to sensitize everyone.
I think that makes sense. So I had a related question. So you showed on your slides that the decision moves from the strategic angle to the tactical angle. Yeah. So I think for the tactical side of it, you have shown that sort of Excel is the primary tool that you are using, and the frameworks that you're using primarily revolve around financial modeling in Excel. What other tools or databases are you using when you take the strategic choices, or even at the tactical level, if you're using some other tools or technologies or frameworks, would you be kind enough to share those?
I think on the strategic side, it's mostly frameworks. It's not, I think the tool, it doesn't matter whether you're using Excel or Word or PPT or what you're saying is it's an intellectual framework. It's an analytical approach. And you could be using Porter's 5 forces or 4 corners analysis or BCG metrics. Those are all. You have to choose your tool. I mean, more often than not, every situation is unique, and you have to tweak any tool you choose or any framework you choose. You have to tweak that and customize that to your particular situation anyway. On the technical side, for financial modeling, I think Excel so far provides you everything that you need in terms of numbers and number crunching. What it might not give you is the kind of knowledge around, hey, which particular modeling framework should I use before even thinking about getting to Excel. And I guess that's what you, as a company, PRM, you focus on. I think your goal is that's what you focus on. I think your company focuses on providing the kind of training and to make people more knowledgeable about the kind of modeling tools to be used in different kind of situations.
From your presentation and then from my experience, what I figured out is that that there are 2 things that you need to do well in any complex problem. One is to break it down into smaller pieces, That would mean sort of some kind of a structured approach to thinking. So for example, if I'm speaking about any nonlinear, slightly difficult problem, the first thing I need to do is sort of break this into many smaller pieces. If you have a ready-made built framework for you, easy. If it's not there, then probably you need to build the framework first. But I think structured approach or structured thinking is the key to sort of start solving the problem. And then what I found from my experience is that Excel provides you with most of the tools that are necessary to sort of solve the tamer problem. So from what I see is that a complex problem is a mix of many tame problems, right? So for example, let's say if I want to figure out whether to get into the Latin American market, the first thing that I need to do is break this complex problem into many smaller, tamer problems. So for example, is the ROI going to be enough? So the tame problem is to calculate the ROI. Now from ROI, I can still break it down into more smaller problems where I just sort of speak about investment and probably the profits that I'm going to get from these investments. So those are slightly easier problems to solve. And as I breaking this down into smaller problems, it's a sort of starts becoming an easy problem. And the moment sort of it becomes an easy problem, you can always use any of these tools. Even a calculator could be sufficient. But if you want to organize a lot of information, as the sheet that you shared, sort of it had a lot of information that had to be collated. So that I find Excel does provide you a fairly sort of good tool to sort of organize the problem into smaller problems and then sort of collate and get to the final answer. So what's your opinion on the same?
Yeah, I think most of the time, so whatever you said, most of the time that's true. I do not agree that complex problems are essentially are aggregate of tame problems, because I think an example of a tame problem is x plus y is equal to 5 and x minus y is equal to 1. That has a very specific answer. X is equal to 3, y is equal to 2. There cannot be any other answer. A complex problem can have multiple answers. So how do you grow in Latin America? We gave one solution, one set of strategic choices. That does not mean that that's the only solution. What we're trying to do is, the way we are trying to keep it bounded is by saying, when we tell them that, hey, the first question that you're asking is, do you want to stick to your growth vision? If the answer is yes, that starts training your problem, and that starts bounding your problem. But the answer is no, we are actually open to changing our vision completely. And there can be hundreds of solutions to that problem, right? So essentially, it's not. What you're doing is the complex problem. This problem statement, identify growth opportunities, is a complex problem because it's not bounded enough. It's not. You could bound it. You can. I think part of the consulting process is you try to bound and make the choices smaller by giving rational explanation to why you're bounding it. But that does not mean there could be multiple ways of bounding it. One way to bound this problem is that, hey, let's focus on our current medical devices. Another way to bound it is, hey, let's focus on our current set of customers, or let's not get into new customer segments. Those are both valid choices, right? It's not. So what you're doing is you're trying to apply logical boundaries and trying to make them tame problems. But that does not mean that's the only answer to that problem. I don't know if that makes sense.
I would agree with you. So my only point was that from ambiguity, which is there in the complex problem, unless you get to some kind of a definitive answer, which you would get in a tame problem, it would be difficult to take decisions. So I would agree with you. Probably a complex problem has two parts. One is the ambiguous assumption that you make, and the other is the tame calculation that you're going to do. So for example, in a complex problem, like let's say a revenue estimation, there would be an ambiguous part called the growth rate, the assumption on growth rate. And then if I knew the previous year's revenue and I made this ambiguous assumption about the growth rate, then I can always sort of, then I'm solving a tame problem of multiplying that growth rate with the last year's definitive number to get this year's number. So I would agree with you. There are obviously some parts of the complex problem that might not be it might not be possible to distill them into tame problems.
Yeah, no, absolutely. I think there are many ways to tame a complex problem, and as long as you're clear, for example, the consulting business in itself, there is clients mostly know everything that you're telling them as consultants, but they still hire you because we call it, consulting is a trust-based business. I mean, they are hiring you not just to bring in information, they're hiring you to be able to handhold them and say that, hey, yeah, you're taking the right decision. The data, they might already have the data in some cases, but they might not be as confident about taking the decision. But as consultant, you're going in and say that, hey, we have seen companies do this many times. We think that you're making the right decision, and so on and so forth. So it's just actually making that assumption in itself becomes a huge exercise, right? The revenue growth assumption, that is a huge component of actually solving that problem. And then you might actually, even if you took a number and finally applied that and got an answer, you can still never be sure that was the right answer until the time you are not in the next year. Right?
That is so true. So what I would also like to share with the audience is that, see, as far as building a career in finance, consulting or investment banking is concerned, I think these are the two key skills, as far as my experience says. These are two key skills that you need to learn. One is obviously to structure the problem into smaller pieces, break it down into a logical fashion. So for example, logically break that problem down. So a couple of frameworks, useful frameworks is what you shared with us. But I think there are obviously more frameworks. So for example, let's say if you are going to prepare, let's say, revenue estimations, then break that down into products and volumes, and then sort of make assumptions regarding product growth or the volume growth, and then sort of multiply that to get into your revenue estimation. And then probably go and have a similar strategy to project your costs as well. If you are, let's say, building a P&L or let's say a balance sheet, then sort of, and then same methodology could be used to solve any problem. And I think two key skills that I find are, one, sort of structured thinking, and two, usage of a tool like Excel. So I find that sort of both these are really useful. Especially Excel could be used to, one, organize a lot of information, and then, as you have shown in your sheet, perform a sensitivity analysis, because none of these problems has a clear-cut solution. So performing a sensitivity analysis and then showing as in what are the probable solutions, I think that is quite a necessity. And then obviously once you have sort of done this analysis, show that in a very structured, beautiful manner to your end client. I think that's again something that consulting companies master on. So I think building relevant dashboards for the management, building the relevant charts, I think that's what is needed to sort of ace the case, if you would say. What is your view on that?
Yeah, no, absolutely. I think when I used to love mathematics when I studied school and engineering, and I still do. But the more you start realizing very soon that you definitely need to have those skills, that you're good in analyzing and you're good in terms of solving the tame problems at the minimum. But I think as you grow and get into the real world and get into business and understand business problems, I think you start realizing that there's so many other skill sets around like understanding human behavior, business behavior, and trying to, as you said, Param, you first of all identifying what the problem is that you're working on, and then being conscious, actually looking at it very, very carefully and saying that what kind of problem am I dealing with, and then apply all your skills, analytical skills, mathematical skills. That's not the hardest part, right? And it's not, with due respect to all mathematicians, and I, as I said, I think I and Param, I know that you, both of us, love mathematics. But there is a bigger skill set around how do we break down the real world problem into more manageable pieces and then pick up the right tools to solve them. Absolutely, and I think I personally don't know all the financial modeling tools out there, but I think what I've started appreciating much more is that most of the real life problems, or if you learn how to break it down, finally you might end up using some of the simpler tools. What is really important is to figure out what kind of tools fit in there.
I would agree. So what I would also like to share with the audience is that we do offer a training program where sort of you can learn this art of financial modeling. That's to sort of it again covers two parts. One is breaking down the larger model into smaller pieces. So it is covered through case study, and then sort of using Excel to build the complete sort of model for it, and then perform a sensitivity analysis, and then sort of come to a final conclusion. So we do have a structured program around this. So if the audience is interested in joining, so it's a 20 hours online training. And apart from that, we are also running this in the blended fashion. A lot of countries like US, Singapore, Middle East, we have Jeddah and Dubai. And apart from this, we also have a lot of these classrooms running in India as well. So people who take these trainings, so the CFA Institute has continuing education program. Sort of if you complete this training, you earn some CFA continuing education credits for this as well.
Okay, I think there are also, seems like I'm looking at the panel, it seems like there are a few questions. I'm not sure whether we've covered all. We have 2 to 3 more minutes. Let me see if we can cover those. There is
So I think we have covered most. I think one more question that that George has asked is typically how much would it cost for such a strategic study to be conducted?
So it can. So that's a really broad question. We have done studies like this in $200,000. We have done studies like this in $1 million. It really depends on the extent, like how many products are you talking about, how many countries are you talking about, what is the burden of proof, what kind of decision are you making? Is it really, are you making the decision for the company as a whole? Are you making the decision for one particular business unit? But it can vary quite a lot. I think this one, I can't tell you the exact figure for this one, but it can be $200,000 to $1 million, even more in some cases.
Okay.
Does that cover?
Any other questions that you would like to?
Yeah.
Yeah.
All right, Param, I'll pass it on to you, and you want to issue that.
So fine. So thanks a lot, Tarun. So I think this session has been very useful. I think you have shared a lot of your experience around consulting. So anything else that you would like to discuss?
No, I think it's great. I thought the questions that were being asked were great, and I'll just say the same thing again. It's easier for smarter people, for analytically sharp people. It's not very difficult to understand the mathematical concept and the numbers and the modeling concepts, but I think just whenever possible, try to take a step back and also look at the broader business situation, and the more experience you can get using those tools in different kinds of scenarios and situations, I think that the more valuable you will find all the modeling skills that you have.